Namaste, viewers. Welcome to ST Money's Morning News, your weekday business news channel. It is Wednesday morning, December 18, 2024, and I'm your host, Sunil Thakker of Sunny Talks Money. Let's roll. The stock market highlights from Tuesday, December 17, 2024. The Indian stock market extended losses for the second straight session on December 17 amid selling across all the sectors. Benchmark equity indices BSE Sensex and the Nifty 50 witnessed a sharp correction, settling down by over 1% each, weighed by selling across all the counters. After the negative start, the market extended profit booking as the day progressed and dragged the indices further down as investors remain cautious ahead of Fed decision on December 18. A cocktail of concerns, a higher than expected trade deficit weighing on the rupee, nervousness ahead of the US Fed FOMC meeting, and a slowdown in Chinese retail sales rattled investor sentiments today. The Sensex tumbled over 1,000 points or 1.3% to close at 80,684, while the Nifty shed over 330 points or 1.4% to end at 24,336. Adding to investor caution, India's merchandise trade deficit widened to $37.84 billion in November from $27.14 billion in October, exerting pressure on the rupee. The Indian rupee touched a record low of 84.93 against the US dollar, further unnerving foreign investors already concerned about the rising dollar index. The rupee has remained under pressure for several months due to sustained foreign investor outflows and a strong dollar depreciating 2.01% year to date against the greenback. On the global front, China's retail sales rose by 3% in November from a year ago, according to National Bureau of Statistics data released on December 16, missing the forecast of 4.6% in a Reuters poll. This was seen as a sign that Beijing's effort to boost the economy have failed to revive sluggish demand. The day ended in favor of bears as all the constituent stocks of the Nifty 50, barring Cipla and to a small extent ITC, ended in the red. Shriram Finance, Grasim Industries, Bharti Airtel, Hero Motocorp, and JSW Steel were among the top laggards. Cipla emerged as the sole gainer, rising 0.2%. The stock climbed over 2% intraday after Kotak Institutional Equities upgraded it to a buy from add, citing attractive valuations, upcoming US launches, domestic recovery expectations, and healthy growth prospects in South Korea. Broader markets also mirrored the benchmarks, with Nifty Mid Cap 100 and the Nifty Small Cap 100 indices ending lower by 0.57% and 0.68%, respectively. All the sectoral indices ended in the red, barring Nifty Media, which ended higher by merely 0.02%. Among others, all the banking indices on NSE, along with auto, financial services, consumer durables, and OMCs, ended down by 1% each. Sector wise, financials, oil and gas, and IT weighed on Nifty, but HDFC Bank, RIL, and Bharti Airtel were the primary culprits. All three stocks, that's HDFC Bank, Reliance, and Bharti Airtel, combined contributed to over 100 points of decline in the Nifty 50 index. The financial sector faced additional pressure as HDFC Bank shares fell over 1% following a warning letter from SEBI alleging non-compliance and disclosures regarding the resignation of a senior employee. The Nifty Bank, Nifty Private Bank, and Nifty PSU Bank indices dropped over 1% each, with Axis Bank and ICICI Bank contributing to the weakness. Despite the rupee's depreciation, export-heavy Indian IT stocks failed to gain traction. The Nifty IT index slipped 0.7%, weighed down by losses in TCS, Infosys, and LTI Mindtree, which declined up to 2%. Investors now await the Federal Reserve's policy decision on December 18, where a 25 basis point rate cut is almost certain. More importantly, markets are bracing for Federal Reserve Chair Jerome Powell's commentary on the trajectory of interest rates, which could dictate sentiments in the days to come. The fear index, India VIX, which gauges volatility in the market, ended higher by 3.31% at 14.49 points. In the US overnight, US stocks declined as traders braced for the Federal Reserve's widely anticipated rate decision and its forecast for next year. Traders are now turning to Fed's last rate decision of the year due on Wednesday. A quarter point cut is widely expected, but what happens in the following months is less clear. While the US economy is resilient, the prospect of high inflation may give Fed officials pause about the pace of further moves. The Dow Jones Industrial Average fell 267 points to 43,449, its ninth straight fall. The S&P 500 slid 0.39% to 6,050, and the Nasdaq Composite dropped 64 points or 0.32% to 20,109. Brent crude is $73.35 a barrel. Gold is rupees 76,990 per 10 grams. Silver is rupees 90,770 per kilogram. Now, for today's outlook for the Indian market. A long bearish candle was formed on the daily charts, closing below 24,500, indicating further weakness from the current levels. It can be said that the current market texture is weak, but a fresh sell-off is possible only after the dismissal of 24,275 zone. Below this level, the market could slip to 24,200 to 24,125. On the other hand, above 24,400, expect a pullback rally up to 24,500 to 24,525. Technically, this market action is indicating a lack of strength to sustain the upside bounce. Stocks on radar today: Vishal Megamart, Mobiquick, JSW Energy, Wartech Wabag, Pondy Oxides, Aurobindo Pharma, Jindal Saw, Route Mobile, Gujarat Industries Power Company, Aditya Birla Real Estate, Exide Industries, Sonata Software, Sun TV Network, LTI Mindtree, Hampton Sky Realty, Aditya Birla Sun Life AMC, and Restaurant Brands Asia will be in focus on December 18 today. That's it from me today. I will see you again tomorrow morning. In the meantime, please do subscribe, share, and like this video. Thank you very much. Happy investing, stay inspired, and remember, it is all about money.